All right, good day, traders. Today we're going to take a look at gold. This is the continuous contract, and we're watching June gold for a potential short-term trading opportunity. This is a daily chart of gold, and you can see looks like we're starting to get a little weak. Now, we've been in a pretty solid uptrend since this breakout here right at the beginning of April, this break of this trend line here, moving all the way up from around 1720 up to about 1920, or a $200 move. Huge, nice swing move there to the upside in gold, trading off of this double bottom here. But today we're taking a look at what could be some potential short-term weakness. We still are longer-term bullish gold, but we like to remove our thoughts, our emotions aside and take a look at the charts. Now we know seasonally we are coming into a more weaker time of the year, not necessarily bullish, not necessarily bearish, but just more sideways to flat with a little bit of favor to the weak side. You can see this is where we are right around here, and we continue to kind of drift lower. This is based on 5, 15, and 30-year historical price averages. Get a little bit of bump there at the end of the month, early July, but then it continues to be more of a chop fest until we get these late fall, early winter seasonal lows that then trade to the upside. So we don't really mind getting short this market, of course, always with defined risk. But what we're looking at here, if we go to a weekly chart, you can see that we are coming up into an area of potential supply or resistance here into this 1900 area. We know as well that when we have these nice round psychological levels, i.e. 1900, that can also serve as an area in the market as a struggle between the bulls and the bears. So we have this area marked up here on the weekly. So then we come over back to the daily, and now it's all about waiting for things to line up. So in addition to trading into weekly structure, we also measure from this swing low to this swing high. We're also trading at the 786. Now, I believe pretty strongly in trend lines, simple trend line analysis. So ideally would like to get breaks down below this level, but that is going to give up roughly $50 of the move. We have a shorter term trend line here that we can connect right here, coming in here at the 1890 levels. So I think the best play to get bit of a better move or earlier entry is to drill down into the lower time frames, such as the 4-hour or even hourly, and look for areas of divergence, which you can see we did get a divergent signal here a couple days ago, followed by this bearish candle into this area right at the 786, as we indicated right here. So if we start breaking down below 1885 and that area holds, we look to run it down to approximately 1825, 1830, and being cognizant of this longer term trend line. So we risk up here above 1920, looking for trades back to 1835, and that gives us about a 1.5 to 1 reward versus risk ratio on the trade. I'm going to be speaking at the Mad Hedge Fund Traders and Investors Summit the week of June 8th through the 10th of 2021. I'm speaking on June 8th at 3 p.m. Eastern, where I'm going to be covering some of the strategies that I just went over and much more. There's going to be a great lineup. So go ahead and put your name and email in fields here. Click register now, and I can't wait to see you at the summit.